Now we'll focus on preparing that last statement for us, the balance sheet. Like I said, we're not going to be preparing this fourth statement, the statement of cash flows, in this first part of the class. The last statement that you'll have to prepare is the balance sheet. Okay, as a reminder, assets, liabilities, and equity are what appear on the balance sheet. So preparing it, we are still, of course, going to have that 3-line header. Who, what, and when. We're going to separate our balance sheet almost like that accounting equation, with assets on one side, liabilities and equity on the other. Okay. Equity, we can call it owner's equity. Stockholders' equity would also be correct since we are focusing on corporations. And then we will list all of our assets, list all of our equity and all of our liabilities and all of our equity. When we add up our liabilities and equity, it should agree to the sum of our total assets. Well, let's go ahead and put some numbers to it with our Kinney example. Back to Kinney. All right, so when we did the income statement, we were looking for revenue and expenses. When we were doing our retained earnings statement, we were looking for net income and dividends. And now we know for our balance sheet, we're looking for assets and liabilities and owner's equity, specifically owner's equity in the form of common stock and retained earnings. And we already solved for ending retained earnings, right? So that will just have to carry forward, much like we carried forward net income to the retained earnings statement. They're all linked, right? They're all interconnected, which is why we have to prepare income statement first, retained earnings second, and the balance sheet third. All right. So if it helps you, you might want to go through the data first and identify what's an asset, liability, and then that common stock. Okay. So hopefully you remember this from a couple videos ago. Accounts receivable, that's an asset. Payable, liability. We already recorded this expense on the income statements. We already did that. Assets. This is actually investments by owner. That's another name for common stock. Dividends we already recorded. Equipment is an asset. We already recorded our expenses and revenue. Supplies. When we see supplies in these earlier chapters, that's an asset. And then we already recorded expense. All right, now you might be wondering, well, gosh, when I had more than one expense, we ranked them. Remember that ranking we did in descending order by dollar amount? That rule is not the same for assets. Assets you're going to rank by liquidity, meaning how quickly that item is converted into cash. So cash is always first because it's already converted, it's already cash. And then accounts receivable is always going to follow second. So cash is number one, AR will be number two. If you have equipment or land, those are going towards the end because land is said to have an indefinite life. So land would actually be last. We have another one down here. So equipment will be last. So out of the four, it'll be last. And that means supplies by default has to be 3. Don't worry, it'll get easier the more we practice. I think so long as you get cash as your first, AR as your second, I will be happy for now. And then later on in chapter 3, it gets to be a little easier. So let's go ahead and list all of our assets. And we said we're going to show assets on the left side, starting with cash, then accounts receivable. Next we said was supplies and then equipment. Bring those amounts down. Cash 6780, AR 860, supplies 600, and equipment 5,000. It's good to see that cash is their biggest asset out of all of them. Let's go ahead and total it up. total assets. You should get 13,240. You know what, let me bring that down. So I'll kind of wait to total that just so we can make it a little bit easier to see. And again, we've split this statement into halves, assets on one side, liabilities and equity on the other. Our liabilities, I believe we just had the one, accounts payable. Feel free to abbreviate accounts payable AP. That is a well-accepted abbreviation. And then we go into our equity. You can call it owner's equity or stockholders' equity. You have two items that make up equity. Go back here to your little notes. The two items are common stock and retained earnings. Common stock, retained earnings. And you might be wondering, do I take the beginning retained earnings balance or the ending? You're going to take the ending retained earnings because you're preparing this balance sheet at the end of the period. Something else I don't know if I mentioned, you'll notice the balance sheet is the only one that doesn't say the whole for the period ended. That is not appropriate for the balance sheet. The balance sheet is a point in time. So it's just the last day of the period that's covered, not over a period of time like the income statement is, just a point in time. So just the last day of the period. So don't get that confused. Bring down your retained earnings, 2990. 2990. Go find your common stock balance that was given to you. Right here, common stock, which is synonymous with investments made by the stockholders or owners of the company. So $10,000. Since we have more than one equity, I'll go ahead and do a subtotal for total equity. And that should be 12,990. Now we're going to add total liabilities and equities. Add it up, see what you get. Plus 200 plus 250. I get 13,240. Double underline. And this, I just wanted to bring down my total assets so that I could have it on the same line. So it is much easier to see. So for total assets, if you add it down, you get 13,240. It's a balance sheet. It's called a balance sheet for a reason. The two sides should balance or be the same. Okay. If they're not the same, something went wrong. Maybe you forgot to bring down an asset. Maybe you forgot common stock. Okay, so it's nice to have that built-in check into this last statement. Are your amounts the same? Hopefully they are. Give them a $sign and a double underline, and you are done with the balance sheet. Good job.